Hello, good afternoon. D.R. Barton Jr. coming to you here for the Afternoon Outlook on Thursday. Let me get the date right, April 23rd. I'm wondering if any of you are having this sort of dysphoria, this disconnect of days running into days that I'm seeming to have, trying to remember if it's Wednesday or Thursday, what day of the week, what date it is. Be interesting to hear if you're getting any of that, because it's sure happening time and again for me. Looks like my earpiece here with the producer is going to be just giving us trouble again. Let me go ahead and fix that there. I hope that'll help. Probably not. These things never stay in place. So got lots to talk about today. There was just big news right before we came on about a half an hour ago. If any of you saw it, I'm sure the people that are on this update are market watchers. So you've seen what's been going on. Yeah, absolutely experiencing that. A couple of people talking about this these days of the week. So yeah, what's going on today? We'll jump right into that, and then let's talk about that right after we get our fantastic little review of what we're going to talk about. So let me jump down here to the corner over here. There we go. Get out of your way. Let me pop up our daily notes, and we'll then dig right in. So here's what we're going to be talking about today. Today's moves, plural, up, down, and then we'll see where we go from here. The unemployment initial claims number was a big deal. We can just talk about that right now, then we'll look at the move in a minute. 4.4 million new claims. That's why they call them the initial claims report. 4.4 million new claims. That is just a whole bunch. Remember, before these last 4 weeks have come out of earnings, let's see, this is the fifth week that we've had over a million. The highest ever was 7,000. When we went to 2,500, then to 3.3 million, then to 6.6, then to 6.7, then to 5.2 last week, 5.275 last week, 4.4 million this week. And the market said, it wasn't horrible. I think that's where we are today. I think that's where we are today in the markets. If I remove this and talk about our age-old teeter-totter, the balance between what's happening with HIV, with the COVID, with the CV-19 over here, and the health fallout and economic fallout from that. And over here is all the money, the stimulus dollars. And I keep drawing this up here for one simple reason, folks. It's the only thing that's happening. It's the only thing that's happening. We have narratives in the market that drive things. And if we understand the narrative, if we understand the top picture of what's going on, we can play the underlying bounces and curves knowing that. We had the Trump growth narrative for many years. Whether you're one of the president's admirers or detractors, you cannot deny that from November of 2016 up until February of this year, with a few hiccups, notably December of 2018, the market was pretty much on a tear almost the whole time. And to be on the wrong side of that was just to be wrong in the market. And we've had other times where the Fed stimulus was the deal. We've had plenty of other times when other things were happening, going all the way back to 2008, 7, 8, 9. We had the debt bubble and all the outfall of that. So if you understand the big picture, then you can play what's happening in the bumps underneath. This is the big picture, and it's so well balanced right now that it's crazy. And we'll look in just a minute at why that's driving things today. We'll also talk about remdesivir. We hardly knew ya. And I'll explain. Also, our daily COVID, that pop in the U.S. was not so much, not as big as it seemed. We're still really, really kind of flat. Numbers kind of falling, but not falling very quickly. So it's good. It's good that we're not increasing day after day, but we're not really falling either, although some states are seeing that effect. We also have, we'll take a real quick look at oil. things in the oil patch are settling down a little, although along with the markets, oil has taken a little fall recently. And we're going to take a look at sectors in a different way, a way that we have in prior weeks, but that we haven't looked at this week. And I wanted to go back and review that because looking at sector rotation, how things are moving, really informs us quite well on how investors and traders are thinking and positioning their money. All right. Short-term levels to watch. We always look at that. The upcoming earnings. We've got a big one after the close today. We had several modest ones before the open that we'll talk about. Some trades to think about, and then as always, we'll dig into your questions. I hope that all of y'all enjoyed yesterday's extended session. I talked until my throat got dry with you folks and enjoyed every second of it. Always enjoy having you on and hopefully bringing you useful, actionable information that you can use in the middle of the day, which is late in the middle of your afternoon at least. Okay, enough for that. Let's go look at what happened with the employment numbers this morning. We're going to let's go to our SPY chart, and because that will give us pre-market. The cash index does not start calculating until the open, and it stops at the close, where traded markets like the SPY, the exchange traded fund that's based on a basket of stocks that simulate the S&P 500's moves, they will trade pre-market as we have talked about. So there's a 5 minutes. Let's get up our 24-hour chart instead of just the regular hours market. There's the open, 9:30. So the open we hit right there. And here is 8:30. So traveling into overnight, the markets were relatively flat. If we look at the close, we had this big down bar yesterday at the close. So right around there. And you can see that the market was sort of undecided. It was down in the Asia session, up a little bit in Europe. In the European session, which starts about when the markets open around 4, they starts at 3, and then pull back and look, we're right around that same line. And right before the announcement, we were right at break even, and then the number came out, 4.4 million new unemployment requests. Now, some people, there have been some underlying chatter that number may even be a little bit bigger. That may have helped keep the sell-off going. We'll look at that in just a second. That the states are having trouble keeping up with all of the requests coming in. So the numbers being reported, there's some issues about whether or not they have been really good the last couple of weeks. Tell you more as I hear about that. That right now is a speculation rather than a pure fact. Although you can imagine people that were getting a few hundred to a few thousand requests coming in before, now getting hundreds of thousands. It is a big deal, and a big actually stress on the systems of those states continues to be. All right, so that's what happened with unemployment. So the number went up, and why? Because again, it wasn't much worse than expected. I think with all of the stimulus money supporting the market, that the only way economic numbers are going to drive us significantly down is when they are much worse than expected. Not a little bit worse, not about as expected. They've got to be much worse than expected to overcome all that ballooning, all that support from the stimulus money. So that's basically what drove the markets all morning, and they just kept stair-stepping up after right there was the open. Big up, little pullback, big up, little pullback. Tried to get up, but couldn't. And then we got over to here, and the question becomes, what happened right there? What happened right there at, let's see what time what time we have. Let's see, there is the time is, that bar closed at 12:45. So that was the 12:40 opening bar. And here is what happened. I will show you by putting up another chart symbol. We've already seen a hint in our notes. And there is the hint in your notes. The 12:45 bar right there. There it is. The 12:45 bar, the same exact bar. Gilead remdesivir news. And as you can imagine from where the stock's trading now, it actually traded down to this bar just above 76 and halted. Trading was halted for about 5 minutes due to excess volatility. And now let's take a look at that news. And it was broken by the Financial Times, a very well-respected newspaper out of London. It's the one, if you've ever seen it, it's peach-colored. Kind of cool. Look like kind of like this, although it doesn't do it much justice on my page here. But the Financial Times, Gilead antiviral drug remdesivir flops in first trial. So what are we talking about? Last week, what happened last week in the markets? And then we'll come back to our news story. Let's look what happened. Let's pull up just a daily chart of Gilead, and we'll be able to see. Look at this bar. This bar was when Gilead got the report, came out of Chicago, of a small trial that was being done, and it wasn't the same type of trial. It wasn't a randomized trial, but they had been given severe patients some remdesivir and had gotten some really good results. And anecdotally, a scientist would say, anecdotally, those results were telling them that the drug was having some efficacy in these very sick individuals, in the worst of the worst, the most severe cases. And Gilead jumped up. The market leapt up, if you'll recall, had a huge day 5 days ago. Today, a different story for Gilead, because this, and the way this happened, we'll see if there's any outfall about it. The WHO, the World Health Organization, leaked a document and then leaked it. It was accidentally, and I'm going to put that in air quotes, accidentally put on their website and then taken down. Let's look at the news real quick here, and then we'll go back to markets. So here's the news. Let me pull up. I'm not seeing my people here. Okay, we'll get back and take a look at your comments in a second, because I got to run through here. So basically, this was accidentally published by the WHO and seen by the Financial Times. So the Chinese trial showed remdesivir developed by the California-based Gilead. Let's look here. 237 patients, but here's the key. This was a randomized trial. So they took 237 patients, and unbeknownst to those administering the drugs or those receiving the pharmaceuticals, nobody knew who was who among the 237 patients. So out of that, 158 received it, 79 did not, so 2/3, 1/3. There were some significant side effects, which meant 18 had to be pulled off. But in the document, which is undergoing peer review, not ready to be published. This was leaked before it was ready to be published. The WHO said it was shared by a draft document provided, yada, yada, yada. But the bottom line was, let's see if we can erase our drawings and get to the bottom line here. The study was terminated early due to low enrollment, and it was underpowered. That's what Gilead's saying. Look, it was terminated early. It wasn't. The Chinese said it was terminated early because it wasn't working. Gilead said it wasn't done properly. But bottom line was, in this randomized trial, it looks like remdesivir did not have significant effects, therapeutic effects. Now, why is that such a big deal to the markets? Let's review that once again. We'll come back and look at you in just a moment, chart. We're going to come back to that. So here's Gilead down 76, was trading 82, was up as high as 84 today. So a big drop, down 6% after being up quite a bit today. So the big issues with COVID are that it's so easy to transmit. It's so easy to transmit that it transmits in people who don't have any symptoms, that are asymptomatic in medical terms, so that if you are asymptomatic, you are just carrying the virus and don't even know it. You don't have a temperature. You're not having any of the other things that are going on. They still have a study came out that was published in in Nature, the top one of the top 2 scientific journals in the world, that said that those people, asymptomatic carriers, those who had the antibodies, the virus antibodies in their blood, were still as 55% at 55% level of being able to transmit the virus. So as somebody who's fully symptomatic. So that's a new thing. Very few diseases are like that can be transmitted so readily among an asymptomatic patient. So all of these things, highly transmittable. But then what happens? We've got this big bifurcation of people who get the virus and who are asymptomatic, who get barely a fever, like Tom Hanks, wait it out for 14 days and go back home. Life is normal. And then some people who it really attacks their pulmonary system, their lungs. It does permanent damage to some and completely shuts down the breathing function in others to the point of death. And the big deal, which is what remdesivir is all about, is we have no therapeutic treatment to slow the effects of this in people whose symptoms are growing more severe. We don't have a proven way to get somebody who's sick to be better. If you get malaria, that can kill you. If a mosquito bites you, you get malaria, that can kill you, and it happens to tens of millions of people every single year who can't get the proper drugs, the antibiotics to treat that. If you get malaria here in the United States, the doctor diagnoses it, the doctor, she or he, gives you antibiotics, you get better, you get back to life. We have a therapeutic way to treat malaria. We do not have it for coronavirus. That's why this is such a big deal. When you get it, it's a roll of the dice how it's going to turn out. Whether you're really healthy, whether you're overweight, whether you have diabetes, whether you have other health issues. It's still a roll of the dice. That's why this was such a big deal, and that's why the market is still doing what it's doing. Let's look at the market here. We'll just look at a 5-minute chart real quick on INX, and you can see after peaking at one of our key resistance levels, we'll come back and talk about this. Whoops, I just moved it on accident. Let's move it back up if we can. I had it on touch. There we go. We will... After we did hit that, then we had the step down, Gilead, rebound off of Gilead, but still down. The market's going, we thought we might have had a therapeutic fix, the big H, health effect of COVID. Not so. All right, that is huge news. Let's go. We got a couple of other pieces of news we wanted to bring out. Let's hit this one. The Gap store warns of a cash shortage, suspends rent payments. We'll take a day next week. Tomorrow we'll do some other stuff. We'll take a day next week and go through what's happening on the rent mortgage side of things. When people can't pay mortgage, people can't pay rent, and you're seeing these huge companies that are just telling the people that are renting to them, these huge mall operators that own the mall, that pay the debt service on the mall, that do all of that, that build the mall. They're saying, no, we're not going to pay rent, kick us out. And they know they won't get kicked out because they are cornerstone tenants. We'll see what happens with the ripple effects of this, and we'll look at the ripple effects of this. What happens to those companies? They have expenses to meet. So this whole thing it's not just as easy as Cheesecake Factory and Gap saying, we're just going to stop paying rent. So we'll continue to follow that story. This one's very interesting. Empty kitchens, closed stores, small China stores, firms continue to struggle with and to cope with the epidemic fallout, the pandemic. Let's call it what it is. This is in Reuters. If you want to go look it up, look under China retail. You can see up here under China retail. But this is very interesting how slowly things are coming back, especially for the small stores, the small street vendors, the small little teeny shop, little teeny restaurant. That business is coming back very slowly. It's something to keep a very close eye on, because the hope here in the U.S. is that we're going to start opening the U.S. and things will be coming back to normal. That so far doesn't appear to be the case in China. So we'll continue to watch that, because that will have a big impact on most everything, how quickly we can come back from this. Okay, there's kind of our news for the afternoon. The market is still struggling, still going down. We'll visit this as the very last thing to talk about what the possibilities are for the market, but I will tell you one big effect here that we're seeing. The gray line here is the open of today. And let's pull up the spider, because it's much more useful, because they do some adjustment in the cash index to go from yesterday's close to today's open. Let's pull up well, if I could not put two Y's in there, that would be much better. There we go. All right, here we go. Here we have the close yesterday. That's a very important line. Let's just put them on here. Let's put the close yesterday on here. Horizontal line. There we go. There's yesterday's close. And then we have the open today. So let's put another one right at the open. You can see that we've crossed through the open. We're heading down toward the close. In the initial Gilead news, this bopped right down, but then sprang right back up. So can't put much credibility on that number. But people are going to watch if we go from positive to negative. That's going to be a big thing to watch for the rest of the afternoon, getting a little teeny bounce just for as long as I've been talking about this. Something we'll keep an eye on. We'll check back before we're done here today. Okay, I told you we were going to talk sectors today. Let's do that real quickly. You already saw my sector chart up here. Let's pop it up here again. And what I wanted to do is look back. When you pull this this awesome app up in stock charts that will compare the major sectors, it goes back 200 days, which happens to be to the basically 2nd of July, to last 4th of July celebration. You can see for that long a period of time, all the way back since July, we have a market down 6%, the broad market down 6%. We have tech up 11%. That is the salvation, and what we've been talking about. That's the small salvation in the market. What we've been talking about, those things that were doing well coming into the virus are going to do well coming out of the virus. So we're going to, with some exceptions of the things that the lifestyle changes that we're making, and we've talked about those many times: telemedicine, work from home, other things like that. So staples have been up just a touch, and as has healthcare and utilities. Why nothing? No bar, dead flat. So utilities, these are the areas that you would consider, almost always consider as sort of the defensive positions, and that's playing out again here. Unlike prior business cycles, technology, not a defensive sector at all. It's a growth sector, but it just happens to be where revenues and earnings are being generated and why that sector is still being treated well. Let's look at some shorter time frames. Let's look at some shorter time frames. Let's go back. We can look at since the beginning of the year, but that doesn't tell us so much. Let's look from the very top. That was February 19th, right there from the very top. You can see negative across the board, and we're going to see what we usually see when we say, how did you do relative to the S&P? We know the S&P 500 was down 18%. How did you do relative to the S&P? And here's what that is telling us. Who has been hurt and who hasn't. Energy, obviously, with the machinations and the horror stories we've had in oil. Staples strong since then. Relative to the market, still down, but relative to the market, strong. Healthcare and utilities, the things that we would expect. And a little bit technology. Technology bouncing back just a little bit better than other sectors. So no real surprises there. Now let's bring this into a shorter term time frame. Then I'm going to take a quick look at your comments before we go and look at oil. Let's bring this down since sort of most of the country was starting to shut down around March 19th. So that's going to give us about 19, 20 days, almost a month, almost a trading month. Who has done well? The S&P 500 since then. Let's pull that back up. It's up 15. So since, and this is near the bottom of the market as well. So what has rebounded a lot? Energy surprisingly is up. Energy stocks are surprisingly up. We see discretionary growth stocks up. We see technology up, and healthcare. We can look at that. Healthcare we would expect. We're having to pour extra money into healthcare for all kinds of reasons to fight COVID. Staples are down. The defensive sector is lagging since basically the lows of the market. Not quite the lows of the market. I think we were the 23rd to get to the lows of the market. So that's very interesting. Now, what about short term? Let's look at the last couple of weeks. Let's make it 10 days. And look at the last couple of weeks, and we see there discretionary outperforming. Energy stocks have been up. Industrials very much down, and real estate rebounding. So not much happening in the last 2 weeks sectors relative to each other, except discretionary stronger than staples, which is risk on. So we've had risk on behavior for the last 2 weeks. So with all of that said, let me run over and take a look at what you guys are talking about, and then we're going to look at oil, and then we're going to talk about what's happening this afternoon for trades. Now I've put that over there. I got to get rid of it so I can see your comments. Hey everybody, let's see here. Got a few things. Let's see. I think Ferrith, you're talking about an ETRN trade. That is someone else. That was not me that recommended that one. So I can give a quick look. We can see what's happening. Yes, it's pulling back today, but a midstream corp. That's one of those tough ones because now you're getting into splits in the using crude. So the one thing I would tell you that leaps out at me on this chart, we have passed through the 50. That's good, but look at this horizontal line right where we're trading, right at that gap. If we get through that, it's good to go. But you can see we're already hitting resistance here. We've hit it 1, 2, 3, 4 days. Haven't gotten through this gap. Filling this gap. That's going to be a major resistance level for that stock there, Farah. Thanks for asking. I know a loyal listener and watcher. Glad you're here. Let's see here. There's Misty talking about in Hawaii. They're having a tough time keeping up with unemployment. Thank you for that comments. You know that's true. All right. Energy sector wasn't affected from the crash in USO. Or some things getting ready to go over the 50. Yeah, Anita, so it's the other way around. USO was affected by the crash in crude. It doesn't. So basically, USO is only investing in crude oil futures. So they're buying and selling crude oil futures. When things get completely out of whack like they were the last few days, that's when the manager of a fund like that really gets just whipped around. What's happening? Things going up faster, things going down faster than they normally have. Usually they have some time to make adjustments and push their durations, how long they're buying those futures contracts out. In this case, they got really whipped around for a couple of days, and it was really about USO reacting to that and not vice versa. So USO does have to buy and sell a lot of futures contracts. So they were affected. Actually, I'm going to amend part of my statement because part of the crash of the front month that we were looking at right here live on Monday, part of the crash of that oil contract was because USO, who's the largest purchaser of oil futures contracts, they were having to unload all that front month in a quick hurry, and that was something that was affecting the futures prices, not necessarily the price of crude itself, but definitely affecting futures prices. So let's see what's happening today. Yesterday we were talking about the spread between the spot month, which is June. Here's the June contract, and here's the July contract. You can see written there. So June's now 660. Now we're at 2180. So remember a couple of days, 3 days ago, we were talking about this being $8. The next day we were talking about it being $7.20. The day after that, yesterday, it started out at 7. By the time our session was over, it was down to $6.80. Right now, it is $5.20. We'll continue to watch this because the difference between the front month and the spot month and the next month out, called the front month, the difference between those is called the carry. How much does it cost to hold oil for that time? And it's a combination of the carry, storage rates, which have really been astronomically high and are starting to come down, and not coming down real fast, but they're not like out through the roof like they were Monday. So the storage cost, and then the speculation on where oil will be a month down the road. So those things come into play, and you can see this is a downtrending number, 8, 7.2, 6.8, 5.2. We'll take a look at it again tomorrow and see what that spread is looking like. And this spread, what happens traditionally is it continues to close down into expiration. Well, this was not a usual expiration, as we said. It was a once in a lifetime expiration. Now, could it happen again if everybody keeps pumping oil and if economies keep shutting down? Could we see this again next month? It's possible, but I would say it's not probable. It's possible, but not probable. Okay. Let's talk about a couple of the earnings from this morning, because I see a question up on one of them. That was on our list of to-dos for today. Wow, 30 minutes goes by fast, doesn't it, when you're having fun? What could be more fun than talking markets and how we're going to make some money, which we'll get to here in a second. I think one of the really interesting things is the story. I thought we had a CXS. It's CXV. So we're talking about Chevron here. Said, why isn't this affecting the big oil companies like CVX as much as it is affecting oil prices like USO? Let's see, why isn't the CVX chart look like that? We've got to understand what CVX does and the other big integrated oils. That's what they call them, integrated oils. There's Exxon. So these integrated oil companies go all the way from exploration to production to distribution, refining, and then final distribution and even retail. So they have stores all the way from the convenience store and the gas station that sells retail gas all the way back to finding it in the crust and everything in between. So the cost of pumping crude is only one part of that whole equation, Susanna, and that's why that's what's happening that on that comment there. So, wow, Rakia, the Take Back Your Wealth event. Yes, we should be talking about that. We were wondering when that was going to be announced. I think it was announced yesterday. How about if we spend a few minutes tomorrow talking about Take Back Your Wealth? We're having a big event next Wednesday, kind of in the middle of the fight against coronavirus. We're going to talk about how you can take back your wealth, and I'll give you some information on that tomorrow. Reika, thank you for the question. So let's see. Preston, our local Bitcoin guy, is talking about Bitcoin price being up today. I guess we can take a quick look at that. Let's see. I'm trying to remember I've got the futures up on my machine, and I never ever have to type the symbol in. Let's see here. Believe there we go. BTC XBT did trade for a while, and I don't know if my feed is cut off or if that's it, but here we go. So here we go. Yeah, Bitcoin up at about 76.55 on the futures. So we could pull up the spot price, but a big up day for it. And that's, we talked about before about what happens with, we can see these curves in stocks. Look what's happened here. This one is the same thing, any traded instrument. So we get this degradation pattern in the movement when we have big volatility, and now it looks like it could be breaking out. It's breaking out from this high, so that's a good thing. We'll look at this next support level, this next resistance level, this gap resistance level here, which will be interesting, but that's still a long way away. So yeah, thanks, Preston. Okay, let's talk about earnings, and then we've got a real quick question on AMD. All right, boy, could you give me a phonetic pronunciation of your name so I won't spell it, I won't say it improperly? Could you type out a phonetic pronunciation to help out your language challenged presenter? So here we go. AMD. I really like AMD long term. And right now where it is, it's in a consolidation. I'm guessing you're going to get a chance to buy it lower because I think a lot of things we're probably going to get a bit of a correction as we're seeing in the markets today. I'm going to guess that this AMD, as you saw, made a new high on Monday. And I really like their product story. I like them fundamentally. I like what they're doing. I like how they're competing in graphics and processors, and they're just doing a really, really good job in innovating. So I like AMD a bunch. All right, Rekha. Thank you. Well, it's a great question, and I'll look forward to talking to you more about that tomorrow. All right, Victor. I'm writing down your stock. If I don't hit it before we leave, type it in the box again, please, because I wanted to talk about a few this morning real quickly. One of them, the two of them, which I think are important and are going to tell us some things to watch for in other stocks. Here are the two that are very similar that I think we're going to have to keep our eye on this morning. Reporting was Domino's Pizza. Now, did Domino's have bad earnings? No, they beat earnings. Did they have bad revenues? No, they beat revenues. Did they give bad projections forward? No, they gave none. They said, we're pulling our long-term guidance, their 2 to 3 year guidance. And Wall Street is really beating them to death about that. The traders are going, oh, we don't like that you're pulling your long-term guidance. Everybody's going to pull, most everyone's going to pull their long-term guidance. Some companies that have really good outlooks because, they're doing well in the work-at-home environment are going to give us some numbers. But, I mean, if you look, and let's look at, guess what this day was back here? This was a huge announcement. They had a pre-announcement leading into earnings, and Domino's leapt through the roof. So we already kind of knew this is sort of a sell the news moment, and I think we're going to see that more and more. Netflix is actually up with the market today. Let's look at that. So these are kind of stay-at-home-ish stocks. Netflix that reported yesterday, they were actually up 2 or 2.5% this morning. Now they're only up about 1%, up $4 from a weak close yesterday. But again, we had a sell the news event. They had good earnings. Earnings just a teeny bit under, really exceptional subscriber numbers. And I said, I think this is a short for the next couple of weeks, and I still believe that. I think these work-at-home stocks that have done really well and are up at the top of the page, like this one is, are going to continue to be work at home or live at home. Obviously, get stuck at home, Netflix to stream. I believe they are going to be sell the news types of stocks if they don't just have completely blowout numbers. That's what we saw with Domino's. That's what we saw with Citrix Systems. We've been talking about Citrix a lot, and for weeks, all the way back, and during this run-up, we've been talking about Citrix. And look at this down 6% today with the market up, or actually right now kind of at break even. So again, a sell the news moment. Did they miss earnings? Nope. Did they miss revenue? Nope. But they didn't give glowing forward guidance, and I don't think we're going to get that kind of guidance out of people. Will they recover? I bet they will. And this is sort of, you can see that's sort of a support level there. Could you buy this here for a 10-point, 15-point move? I'm thinking yes. I'm thinking Citrix is not so much like Netflix is a short as that much more that it might go sideways here then and pick up again. So I'm a bit more neutral to bullish on Citrix after that. But I think again we're going to have to watch these work from home, stay at home type of stocks to watch their earnings for sell the news kind of events. The other one that I think has more interest for the broader economy, and this is the one when you put CVX up there, I thought it was CSX, who reported this morning. big freight shipper, and they reported some numbers and a lot of things that you would expect in terms of agriculture and metals. One of the things that they're moving a lot of are paving supplies, because you can imagine with the roads not being used much, any municipalities and states that have any money to fix roads are doing it now. But look what's going on here. This they had very nice earnings, very good forward, but look, they're only up 1.5% today, and they opened here and have pulled back. But for a transportation company to have good earnings like this with the 3-4 weeks of really bad news embedded there, that's actually a pretty good thing, and I think that helped give the markets a little lift this morning to have a big transportation company with such good news. Now, we've got one more to talk about, because after the close, we're going to get Intel to report. Intel is sitting down 1.5 today. We've looked at their options before. Let's pull it up and see where their options are trading. Here we go. The options, let's look at the ones that expire tomorrow. That'll give us a good feel. We're trading right at 59. Closer to 59 than to 58, but look at this, only 1.7, only $1.70, $1.60 implied move here on a $59 stock. So not nearly as volatile as, let's say, Netflix, as we saw with 5% volatility. Or Booking, we looked at Booking yesterday, 10%, 11% volatility or implied move for the earnings. So there are the news there. Let's look at a couple of other stuff. Let's look at a couple of other things happening. Here is gold today. Gold rebounding and now not as strong as it was this morning. But if you look at that, the other thing that's interesting is the people pulling it out of the ground are doing well. The biggest of the big, Newmont, had a big up morning, and they've given back most of the intraday move, but they're still just above the open here, as you can see in Newmont, and we can see with the gold miners in general. Here is the gold miners, the 3X gold miners. This is a long-term play for our 10-minute millionaire insiders. We were up about 70%, 80% on this trade, which we think is going to give us a lot more earnings win over the longer term, because the miners were really beat down. The stock market, when the market drops and gold doesn't, it still takes the miners down because they're companies. So they have their stock trading. They really got beat up, didn't have a big rebound. And as gold has done better, the miners are picking up and starting to do much better. I think that's still a really nice long-term play if it's not yet in your portfolio. So we've already looked at Gilead was my other one on the screen. We've already certainly talked about that. Let's look at what's happening in the markets. Okay, we've got a question from Wynn. If this is Steve Wynn, who owns all the resorts, the multi-billionaire, thanks for checking in. I appreciate it. And I'd love to stay at your place next time I come out to Vegas. It's a really nice property. Haven't been to the place in Macau yet. So let's look at biotech in general. Here's the IBB. As we might expect, a lot of positivity around the possibility that somebody in the biotech world is going to do good things to help us through this health crisis. And it's not just finding the big one single therapeutic breakthrough. It's not just finding the one vaccine that's going to work, that's going to be adopted. It's not just finding the one test kit that's going to work, that's going to allow us all to spit in a cup and be able to tell whether or not we have coronavirus now or have ever had it based on antibodies. There's lots of those things going on in the support around that whole infrastructure that money's being poured into, and very rightfully so, that's going to keep this, I think, up near the top of the page. So there are a lot of companies out there. I know my good buddy Bill Padalon has written a lot about INO. We've had some people ask about it. It had another big day today, opened way up. They've had some good intermediate news over the past few days. So that, for a real volatile play, that's one to look at. I think that that as a trader, if you look at what happened as a trader, I was gonna, if this got down to 72, I was gonna buy it today. I thought there's a chance they could really drive it down, but it's all the way back up to 77 now. I think on a severe pullback like this, on an overreaction pullback, because remdesivir was never going to be the top earner in Gilead's portfolio unless it proved to be the be-all and end-all of therapeutics. It was probably never going to be much more than a patchwork of a therapeutic anyway. But I think for a trading play, when that was one that you could look at. Patrick, that was NUGT was the one we were looking at, Nugget. Now, there's another one that's GDX. That is a gold miners ETF. There's the gold miners ETF, and NUGT is the 3 times gold miners ETF. So you can see NGT is up well. GDX is really up well. NGT really coming on in the last few days. So yeah, Faith, we'll take a look. It's a fund. It's a fund, Patrick. All right, Regeneron, and then I think we're going to have to be done for today. Good people. So there we go. We'll talk about Regeneron. Top of the page. Again, the quality pharmaceutical companies, I think, are going to, you're going to see the INOs, the ones that have the 1-hit or 2-hit wonders that are going to be bouncing like that. Regeneron just so strong. I would check who asked the question? Farith. Farith, do you know when Regeneron's earnings are coming out? That would be the one thing I would look at with them to make sure we don't get some sell the news issues. But I've really liked what Regeneron has been doing. Look how well they've managed this whole pullback. So that is a long-term follow-through play too. We'll be talking about that tomorrow when we look at the Save Your Wealth event and some of the things that are going on there. So for a preview, what will be a fully sanctioned preview of the Save Your Wealth event, if you haven't signed up for it yet, coming next Wednesday, I believe, if my early information is correct, that I'm going to be heading up. We'll talk about that a little bit tomorrow and give you some tasty insight, a look behind the curtain into what's going to be going on there with that announcement. So thanks a lot for tuning in, everybody. Lots of things going on out there. We continue. Oh, I told you the one thing we do before we check in is look at the 5-minute chart on the spiders, so we can get some understanding on what's going on into the end of the day. There's our 2 numbers that we're going to watch closely. There is the open. That's the open. And here is yesterday's close. Yesterday's close. So that's yesterday's close. We're going to watch those closely. And you can see we came down. When we were talking, we came down here, bounced up, came back and touched it, almost touched it, traded through, came up. That's going to be very important. That's going to be very important for us to watch. So we're going to continue to keep an eye on that. And that's going to be a big one to see where we go. If we get up above the open, that would be good. I think the markets would like that heading into the afternoon and the close. So for the afternoon outlook, this is Dr. Barton Jr. wishing you a great rest of the day. Stay safe out there, and God bless you. And if you got any other questions, type them into the box. I'll hang around for just a couple of minutes, and we'll look forward to seeing you again tomorrow on the mini reveal day on Friday. God bless you. Have a great day.